Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Patel Engineering's results. Remember, the company has reported a profit which has jumped 83% to 141 odd crore rupees. The revenue from operations have also increased by 11.5% at 1343 odd crores. We've also seen a jump on the operational level as well. The EBITDA has seen a surge of 41% at 238 crores in the fourth quarter, and the margins have come in at 17.7% as compared to 14% in the corresponding period of the previous fiscal year as well. Not just that, we've also seen the company's total order book as of March 31st, 2024 stand at about 18,663 odd crore rupees. Now, to detail for us what really was the key reason behind the strong performance this quarter and the outlook going forward, I'm now joined by the top management of the company. Ms. Kavita Shirvaikar joins in. She's the CFO and the whole-time director at Patel Engineering. Warm welcome, ma'am. Thank you so much for taking the time out for this discussion on Business Today. Could you detail for us and our viewers as well? Strong performance, so congratulations on that front as well. What really led you to post this performance in this quarter, and has it met your expectations both on the Q4 as well as FY24 performance?
Thank you, Sakshi. Thank you for having me on the show. Thank you very much. Our guidance was that revenue growth 10 to 15% and order book more or less remain on the 20,000 crore line. I'll tell you as regards revenue and profitability, we are on track. Our for the year revenue, consolidated revenue is around 4,500 crore, which was expected. Our margin is also in the same range, and profitability also has increased substantially. So we are more or less on the line as was expectation. Coming to the order book, last year was subdued. The order book was subdued due to the election year. We expect this to jump up, push order book coming from Q3 onwards of FY24-25.
Okay, ma'am, what is the visibility on the order book front? Right now it stands at around 18,600 odd crore rupees. Where do you foresee it?
So we see post-election large projects coming up for the bidding, and we see March 25. Our target is to increase the order book by at least 15 to 20%. So right now it is 19,000 crore. Our expectation is to by March 25 it should be around 24 to 25,000 crore.
Okay, got that. Ma'am, as of now, what is the unexecuted book in terms of the orders right now, and how do you see things spanning out going forward from here?
See, as you mentioned, our current order book is 18,600 crore. So 60% is from hydro, around 21% is from irrigation, around 11% is from tunneling sector, and rest from other sectors. So as we see, there is huge opportunity available, the sector where we operate in. Like hydro, government vision is almost 50% to be converted into renewable energy, and their target total potential available in hydro sector itself is around 133 gigawatt. Out of that, 42 gigawatt is completed. Balance 18 is under process, under development. I'm happy to tell you that out of 18 gigawatt, we are currently working on 8 gigawatt. So it is almost around 45% of market share. So going forward, balance is to be exploited. And I would like to inform you that another 18 gigawatt where CA clearance is already done, another 19 gigawatt is under survey. So overall, at least 30-40 gigawatt, which is to be government is targeting to complete by 2030. So it will come up for bidding in next 2 years. So we see going forward huge opportunity available in the sector. Coming to irrigation also, current capital outlay of around 93,000 crore. As you know that under Pradhan Mantri Krishi Sanchay Yojana, Har Khet Ko Pani, Ghar Mein Nal, everything is going on at full swing. So overall, we see that we should get our expected order book, and our revenue target for next year is this current year is around 10 to 15% increase, and going forward next year FY26 we expect to around 20 to 25% increase.
Okay, ma'am. So 10 to 15% increase in FY25 on the top line and 25% increase in FY26 is what you're hoping at, for going with the current rate as well. What about the margin outlook, ma'am? Are you comfortable with the current band, or do you see further levers to improve it going forward?
So we are comfortable. We expect same margin to continue in going forward in future.
Okay, ma'am. Also, when we talk about the pipeline on the orders, ma'am, since you already pointed out 15 to 20% increase in order book is what you are expecting. From the pipeline, where all are you on an L1 position as of now?
L1, currently we are L1 in a small project, irrigation project, where our share is around 120 crore.
Okay, ma'am, got that. So also, ma'am, could you help us understand what is your current interest cost and the updated debt on your books, and where is it headed?
So our current debt, consolidated debt is around 1,800 crore. Our interest paying debt is lender's debt plus contractee advance. So contractee advance is around 760 crore. If you compare with the last year, both put together, we have reduced this year around 300 crores. Current year also, we are planning to reduce around 200 to 250 crores. Coming to the debt breakup, around 1,100 crore is working capital debt and rest is term loan debt, which we are planning to reduce over the period of 3 years.
Okay, and over the next period of 3 years, you want to get down to net zero, barring the working capital debt?
Yeah, we are targeting that at least maximum we can reduce.
Okay, ma'am. Ma'am, also as far as cash on the books is concerned, could you give us more sense as to how you're planning to deploy it going forward from here?
So recently we have raised QIP 400 crores, which will not only help us to reduce the debt, but augment the working capital required for the future growth.
Yes, ma'am. Any plans for buyback, ma'am? Your promoter shareholding, which has been coming down, do you see it going back up again? What is the plan on that front?
So not in near future because now we are focusing on growth.
Okay. What about the capex plans, ma'am, going forward from here, since you're looking at a double-digit increase in FY26 also on the revenue front? Order flow visibility is there, clearly there. There are several projects and the government schemes are also doing very well at this point in time. So going forward from here, what are the kind of capex plans we can hear from you?
So our current gross block is around 1,100 crore, which includes all the construction equipment all put together. So every year, if you see, we almost add 100 to 150 crore in the capex. So going forward, also we expect to remain in the same line.
Okay, understood that as well. And overall, ma'am, looking at the long-term vision, I will ask you now on 3 to 5 years term perspective as well, on the order book side and on the top line side. What are your internal targets and where do you see it headed?
So see, our currently it is 19,000 crore. In 1 year span of time, we say it will reach to 25,000 crore.
Correct.
Over the period, this year growth is 10 to 15%. Next year we expect to 20 to 25%. And further going forward next 2 to 3 years, we expect to continue about 15 to 20%. So overall, our target is next year revenue target is around 5,000 crore. And from next year 6,000 crore. So we expect to reach, in next 5 years to reach, double almost 8 to 9,000 crore.
Next 5 years, 8 to 9,000 odd crore rupees of revenue visibility is there. All right, ma'am. All the best for all of those targets as well. And obviously, we've seen a stellar performance on the stock market front. The stock has already given a 150% kind of a return to investors over the last 1 year perspective. And since you're talking about a positive visibility on both the orders and the revenue front, I'm sure that the shareholders will be up for enjoying a handsome rally going forward from here too. Many thanks, ma'am, for sharing with us all your insights and on this quarter, and all the best for the upcoming quarters. Thank you, ma'am. With that, viewers, we wrap up this special conversation with Patel Engineering. You can clearly see a lot of headlines that the management has shared, that over a period of next 5 years odd, the vision is to reach a revenue target of 8 to 9,000 odd crore rupees. Next year, it would be a 5,000 crore rupees, a landmark that the company will be looking at achieving, and beyond that 6,000 odd crore rupees, and looking at a continuous 15 to 20% of an uptick that you can continue to achieve. Even on the order book front, there is a visibility of 25,000 crore rupees, growing at a rate of 20-25% going forward from here too. So a lot of headlines right there. The company is confident of achieving all of those going forward from here. Many thanks for being with us, but do stay tuned as we continue to get you such exciting conversations from the top management of the companies that are reporting strong Q4 earnings.
Embraced by azure waters, kissed by the sun,